Alaina, how does the International Leaders Fund pick stocks? How do you get those long-term winners?
Sure. We are high quality growth investors, and we believe that strong corporate performance is the driver of superior investment returns. So, our process is focused on finding companies that deliver strong corporate performance over time, and we call that sustainable value creation. And we believe that companies that deliver strong corporate performance and sustainable value creation over time will be able to generate earnings growth that's stronger for longer than the market anticipates.
And right now, a lot of the growth is coming from international or foreign stocks as opposed to the U.S. They're really outperforming in the international markets. What's driving this shift? Why are they beating the U.S.?
We believe that several forces are emerging that are leading to non-US equity outperformance, and we consider that it might be more of a movement than a moment. Specifically, rising tariffs in the US, enhanced policy initiatives abroad, and macroeconomic conditions here in the US are narrowing the wedge of growth between US equities and non-US equities. And this is presenting an opportunity for non-US equities to reassert their relevance in global portfolios.
And the tariffs may be short-lived, but you're looking for sustainable value creation. Can you talk about what that term means to you and maybe even give some examples of stocks or companies that offer it?
Sure. Sustainable value creation measures productivity, efficiency, and free cash flow generation. And practically, what that looks like from a corporate attribute perspective is those companies that are increasing market share, that have excellent management teams, that have very desirable products and services, that have strong and durable competitive advantages. And the result is returns and growth that are peer leading. So that's what we mean when we say sustainable value creation. And we have a number of stocks in the portfolio, most of the names in our portfolio, that exhibit this. A name that we like is Spotify. Spotify is the largest streaming service in the world. It has 35% share, and they've been able to monetize their platform and go from being loss-making in 2023 to what we expect to be strong double-digit EBIT margins by 2030.
And how are you dealing with tariffs with international stocks? Because it's something that you might have to deal with one week. It's unexpected, but you're going to have to deal with it with one of your stock choices.
Sure. Initially, we expect that tariffs will be a burden on U.S. household and U.S. household income. We would expect that disposable incomes in the U.S. take a hit. On the other hand, we're looking at geographies offshore where inflation has abated, interest rates are coming down, and the specter for real wage growth is actually quite encouraging. And so we're looking in jurisdictions where consumption and domestic demand are underpinned by those phenomenon, and also jurisdictions where public sector spending might be accelerating. Think about European infrastructure and defense. And of course, we're always looking at long-tail thematics like the AI ecosystem, AI sovereignty, and power compute as exciting thematics that we're looking at globally.
And then finally, what's your outlook for the rest of 2025? It's been a very eventful first half, especially with Liberation Day and then the bounce back after Liberation Day. What's going to happen in the second half, and how's it going to affect your portfolio?
Well, there's lots to come. We still haven't landed on what tariffs will look like and what they will be. So we're listening out for some finalization of the tariff policy. We're also listening out for follow-through from European policymakers about those growth and competitiveness initiatives. And lastly, I would say we're looking for the hyperscalers to confirm their CapEx plans and really establish what end market demand is looking like for AI. So there's lots to come, but I would say that given market volatility, our focus on sustainable value creation will help buttress our returns.
All right, well, thanks for coming on and talking about it.
Thanks, Greg.